Look at this portion here. So this is extreme volatility right after the US election when it is still counting the votes. So that volatility has been reflected in the volume session. If we just compare to the past few days, certainly is very active. And if you're still not convinced, take a look at this type of the spread. So a lot of the swing down, upswing, downswing, upswing, downswing, upswing. So that actually just generated a lot of the upswing and downswing, which there are a lot of the trading opportunities around, and I'm going to share with you what to look for and how to look for some type of the good trading opportunities in the trade review section. Hi, my name is Ming Jong and welcome to another episode of my daily market analysis for the S&P 500 E-mini futures for the session of 5th of November. In this video, I'm going to share with you the market recap from yesterday's session and also a few trade reviews that I've done in the 3 minutes time frame, which I will include the entry, the exits, and also the rationale behind. And going forward, I will also share with you my trading plan together with the levels that I am watching for the session later. Alright, so let me just get started now. First of all, let's get back to the daily time frame and let's start from here. So as you can see in this daily chart, thing that stands out, definitely we have a spike of the volume and together with this sort of the spread. So certainly the volatility is there, and also we see this demand tail actually tested the support level near around 3320, and also that's the resistance level at somewhere around 3420. Have a breakout, continuation to the upside, and eventually got rejected. Alright, so let me get down to the hourly time frame and let's talk more on the market from yesterday. So the market from yesterday, especially during the Globex period, so just prior to the US opening session, during the Asian and also the European London session, is very interesting. Why? Just simply because there's extreme volatility and also a lot of the downswing, upswing, downswing, upswing, which actually presented quite a lot of the trading opportunities around this session. So in the later part or in the trade review section, just maybe another more minute, I'll be sharing with you how to actually look out for trades by just taking advantage of the volatility. So first of all, let me just continue with this. So we see that during the morning session, there is actually a swing down, actually tested and spring of the previous swing low, and subsequently just run up, and then followed by rejection right at this resistance level, and eventually have another reaction down, also create a false breakout, another spring trade of the previous swing low, and subsequently going up, and then just reject a bit, and eventually just tested this resistance level. And during the US session, we have seen the breakout here, and subsequently the level become previously as a resistance, now become the support level. So this pullback actually tested the support level, and currently during the European London session, we have seen a rally up, attempt to break the previous swing high here. Alright, so let me just get down to the 3 minutes time frame and let me show you how to actually look out for trading opportunities by just taking advantage of the extreme volatility session. Let me just zoom out a bit to give you the context. So the secret to actually look out for great trading opportunities during this type of a volatile session is actually very simple. So we just need to identify the support and resistance, and then we trade around there. So we need to form the context first in order to survive in this type of the volatile session. Otherwise, you will just get whipsawed here and there and become a loser. So this is a very important point. We just need to identify the support level. So for example, sorry, I just want to show you a bit more. Okay, so you can see that this is actually a very good support level, 33.20. So previously get rejected quite a few times, and then once it's breakout, we have seen a pullback and then continuation to the upside. So I want to trade somewhere close to the support level, so that will be 33.20. And also just take a look at the swing low as well. That will be the smaller type of the support level that we need to watch. And my first trade actually is based on the spring type of the trade of the swing low. So you can see that apart from the day low here, so the day low will be somewhere around 33.30, and further up we have the immediate swing low level here, so that will be somewhere around 33.40, 44. So my first trade here is actually based on the false breakout. So that is the downswing, actually breakdown followed by a very quick recovery. So this is a spring type of trade or the false breakout. So let me just dive in straight away and walk you through my actual trade. And I think it's very important to let you see the volume as well, because everything needs to just work together, the volume, the context, support and resistance levels, so in order to validate the trade. So we need to pay attention to those things. So first of all, that's the swing low level that I leverage on. So the ultimate support level will be somewhere around 33.20, and then the day low level will be 33.30, and also that's the previous swing low level. So we see that there is a downswing here, and that actually comes with the increasing of the supply. So that actually breakdown of the immediate support level created by the swing low, and subsequently you can see a very quick recovery. So I just bet on the false type of the breakout, so I'm betting on the reversal and to just enter long, but still because of the increasing of the supply, I just want to see a test. So here comes a test. This test actually have a localized increasing supply, but overall you can see that supply has been decreasing if we compare it to this previous downswing. So I take that as a successful test and with a higher low as well. So you can see that subsequently, right after the test, it actually didn't go down. It actually formed a small trading range, and I just take this breakout bar as the reversal confirmation. So I just entered long right after the close of the bar. But at that time, my anticipation was to ride it to the upside to at least somewhere around the swing high, maybe 33.90. But unfortunately, you can see that there is a failure right there. So right after the breakout, we see this failure break back in, and then I did not close the trade immediately because I just want to give it a bit of the buffer, and especially during the volatile session. So you can see that subsequently the reaction actually tested the previous resistance and support and attempt to reverse from there, but it did not happen. In fact, there is a failure right there. So I should have exited my position there for an early exit, but ultimately I just got stopped out with -1 R losses. So that's yeah, I should have exited right after the close of this bearish bar, because if we just take this, the high, and that's the lower high, and that's the failure, so definitely should just exit the trade. But anyway, I just waited for some more time, and here comes another chance. So that's also based on the false breakout. So that's the swing low, and that's a downswing breakdown of the previous swing low, and also that comes with maybe slightly increasing of the volume, but definitely if we compare it to this previous downswing, that still is a decreasing of the supply. And right after that, I just take the second bullish bar, so just leverage on this 2 bar as a combo bar, act as a reversal signal. So right after that, finally I can write it up and I trail my stop, and eventually I think I got stopped out. Actually no, I didn't. I just exit right away. I just exited right away at around 34.20 because that is actually the resistance zone. So I just exited there, and that actually gave me not too bad. I think it's a reward to risk ratio about 2. So that's the -1 and that's 2. So overall I still net about a reward to risk ratio of 1. So right after that, there's certainly a trade, short entry probably somewhere around there, because if we just want to catch a swing, then we just need to mark up the support and resistance level. So 34.20, if we just take a look at the hourly chart, is certainly a resistance level, and I think it's a very decent level as well. So you can see that, okay, so that will be I think from around 34.10 to around 34.20, or you can take it even to 3400. So 3400 to 34.20 will be the resistance zone. So if we just base on that alone, then we can definitely spot some of the trading opportunities around there, because just right after the price bump into the resistance zone, then certainly I think 34.20 to around 3400. So this will be the resistance zone, and you can see that right after that, let me just zoom in a bit more so that you can see the volume. Okay, so certainly this 2 bar has the spike of the volume which containing supply, and we see the shortening of the upward thrust suggested that demand is fading, and subsequently that happened actually right at this resistance zone. So if you did not take maybe this kind of the breakout, then certainly this downswing actually acted as a sign of weakness. So subsequently you can trade a weak rally up. So right after that, that will show you the confirmation. So this will be the distribution zone, and this will be the sign of weakness, and that's a pullback, and you probably can trade somewhere around here to the downside. Otherwise, if you want, then you probably can trade it somewhere around here as well. That's basically just based on the structure alone, but because it's in the middle of nowhere, it's not as much as I desire. But certainly I think once we see this sign of weakness followed by a weak rally up, actually tested the previous breakdown zone here. So you can see that how this type of the technical analysis work. So breakdown and then go back and test the breakdown zone, and then followed by a reversal bar. So you can actually ride it to the downside, and depending how you manage a trade, you'll probably close somewhere during this trading range, or if you are patient enough, then you probably can ride it all the way to the downside. So that's one trade. And another trade that will be another spring trade, because you see once we identify the support and resistance, there's a resistance and there's a support. So this type of a downswing comes with increasing of the supply, and subsequently you can see that there's a reversal right there. So we have a downswing, and then we have a test, and then we have a breakout. So that could become a good long entry to at least to ride it up. So that will be possible, and eventually yeah, that will probably be it. Yeah, depending how you manage your trade or how your trading styles like, there are probably some kind of a trade right there, but definitely this one is just tested the support level. So you can see that the secret to finding great trading opportunities during this type of a volatile session is very simple. So once you identify the immediate or the obvious support and resistance zone, and also the intermediate support and level, then you can easily just trade accordingly. So that's the trade review. And subsequently, I think during the US session I wasn't trading, so actually the upside is still some of the upside. We can see that the volume actually swollen as well, so we have an increase of the volume here, and together with the breakout of the previous swing high and also continuation to the upside. So definitely there's some trade can be taken there as well. Alright, so that's the trade review. Let me get down to the hourly time frame and let's talk about the current market condition. So right now I think the market definitely is in an uptrend, at least a swing up. So that's the swing up. But for the long term, slightly long term, then we can see that it's in a very big trading range here. So that's the big trading range. Downswing, upswing, downswing. So now we are in an upswing. So definitely, if we want to take a look at the resistance level, that will be the swing high 35.40, and also that will be the next resistance at about 3500. So definitely the first target will be 3500 level. If you can just break above and commit above, then 35.40, and if you can just continue, then definitely is the previous high here, so about 3580 or 3600 level. Okay, so in terms of the trading plan for the session later, the levels that I'm watching will be this immediate support level, so that will be around 3430. So you can see that that's the previous swing high. Once it's breakout, it becomes support, get tested, and then rebound from here. So if just have a chance to come back and form kind of the reversal up, then that could be the long entry. Otherwise, if you just simply break out from there, then I'm just looking for continuation to the upside, trading the pullback and continuation. So that's my plan for the session later. And yeah, so far, since the market has rebounded from the low, I do talk about the shortening of the downward thrust. So that's the oversold, shortening of the downward thrust, followed by the best rally up, and then shallow type of pullback, breakout with a continuation to the upside. So once you actually commit above 3400 level, then I think we should actually see some more continuation to the upside, which is unfolding right now. So yeah, we just want to see the market to continue to commit to the upside, to test the target at probably first at 3500 level and then 3540. If we can just break all this, then definitely the previous swing high near 3600 level. This is the end of the video. Hope you enjoyed it. So if you'd love to learn more on how to increase your winning rate and generate more profits from your trades, definitely check out the video that showed up on the screen right now, and do remember to subscribe to my YouTube channel so that you get instant notification of my future video ideas. Thanks for watching. I will talk to you soon.